Now, Egypt has announced that it will convert deposits from Qatar into fixed-term notes. Now, that effectively gives it a $1 billion bond with a 3.5% coupon rate with a 3-year maturity. Now, while this assistance is obviously quite crucial, it's nowhere near enough to tackle the deep economic problems that that country does face. Despite the current political and economic turmoil, the Egyptian pound has held its ground against the American dollar, as CCTV's Yasser Hakim now explains.
The central bank announced a $1.2 billion drop in foreign currency reserves to reach a critical $14.9 billion, barely enough to cover 3 months of basic imports. However, a welcome boost to reserves has come in the form of a new $1 billion 3-year Qatari bond that is part of a $12 billion EMTN program signed by former President Mohamed Morsi before his ouster last week.
It would depend on how much the Qataris are going to be able to deal with the new government of Egypt and how pivotal was it to them to deal with the Muslim Brotherhood and not any other entity that is ruling Egypt. The reality is the economy at the moment offers a lot of opportunities for investors. There are many problems that were inherited from the time of Mubarak and the time of the Brotherhood, and those problems need to be solved, and it is only good investments that can solve them.
Egypt's central bank governor Hisham Ramez's successful trip to the UAE unlocked the funds from the Emirate and Saudi Arabia. Both had previously promised loans and grants in the region of $5 billion, but did not deliver as political differences arose between the Muslim Brotherhood and former administration. Despite the ouster of Morsi and the ensuing violence, the stock exchange hit a 10-year high of 7.5% gains, while the Egyptian pound managed to hold up against the dollar at 7.01.
What happened during the past period definitely affected our ability to import, and thus what you're seeing right now, stabilization, is probably going to be short term. On the long term, it would really depend on the policies of the coming government and how they're going to be handling the financial policies of the country, especially with the central bank. But it's a major unknown that we would be waiting to see over the coming few months on how it's going to go.
For the time being, the economy is managing due to loans and grants from neighboring countries. But experts say it is time for Egypt to concentrate on investments and production for income if it truly wants a sustainable route out of the crisis. This is Yasser Hakim for CCTV, Cairo.
Let's get some more on-the-ground analysis from what's happening in Egypt. CCTV's Yasser Hakim is in the Egyptian capital of Cairo. He joins us now live directly from there. Yasser, new interim prime minister, of course, being appointed today. What are his economic priorities?
Obviously, his main priority is to try to get as much investments into the country as he can. Right now, he was the Arab International Fund, Monetary Fund, Arab Monetary Fund director, and that's something like the IMF, but for Arab countries. So it makes him very well connected with the Arab region and the Arab businessmen and Arab countries' economies. And he will hope to try to lure investments from the Arab nations first before moving on to Europe and the West, who are a bit critical or worried to go into Egypt right now with the political instability. The Arab neighbors are quite more aggressive in that they can take the chances and get into more investments, and he wants to work on that first.
Indeed, we've also seen, of course, between the loans from Qatar, the pledges from the UAE and the Saudis as well, this does give Egypt's government quite a bit of breathing room. But the key clincher here is that loan with the International Monetary Fund. How fast can talks with the fund resume?
There was not a mention of the IMF from Hazem al-Biblawi, who has been announced today as the new prime minister, contrary to reports saying Samir Radwan, a former advisor to the IMF. Now, Hazem al-Biblawi is a former minister of finance and vice minister as well. He will probably have to start opening talks again with the IMF. The IMF said that it is waiting to see how the political how the political side shapes up in the next few weeks before deciding what the next step. So I think that will not be the first step right now, or the first decision to do with the IMF, but mainly to try to create the atmosphere, the proper atmosphere that will encourage the IMF and other donor countries to come into Egypt.
Finally, Yasser, the central bank has also rolled out what it's calling the Support Egypt Plan. Tell us about that and how it works.
It all started as a backlash to the US. There's an outrage in the country here towards the United States when the US administration and some congressmen said that they will suspend aid to Egypt because of the new regime or the new president and the events of the 30th of June. Now, the backlash was that it started with a few businessmen going on a TV show saying, if the US doesn't want to give us money, we don't need the US, we can get the money ourselves. And they opened this account, and it went viral. So a lot of Egyptians are now, and Arabs are putting money into it. In only 3 days, it has, according to the latest figures from a few banks that have this account, it reached 3 billion Egyptian pounds. That's around $600 million. That's only a few days, not just Egyptians, but Arabs as well. And it will be put in the foreign currency reserve as a protection for Egypt, some kind of cash on the reserves from this to be seen how it will be done, what will be done with this money. So it's a basically popular thing that's gone wild in Egypt.
Indeed, certainly something to keep tabs on. Thank you very much for that update. That's CCTV's Yasser Kim in the Egyptian capital of Cairo, speaking to us about the latest developments on that end of the world. Now, let's move on to matters with the IMF. Sub-Saharan Africa's GDP is expected to grow at a far slower pace of 5.9%, down from an earlier projection of 6.3% earlier in the year, in April to be specific. In keeping with the slowdown, global economic growth is also projected to remain subdued at slightly above 3%. In its latest update to the World Economic Outlook, the International Monetary Fund has essentially downgraded a marginally somewhat optimistic outlook for the global economy, citing weak domestic demand in major economies, slower growth in emerging markets, as well as a longer Eurozone recession. Now, growth in sub-Saharan Africa will be somewhat weaker than earlier projected by about 0.4%, as some of its largest economies, especially Nigeria and South Africa, struggle with domestic problems and weaker external demand. Growth in some economies in the Middle East and North Africa also remains weak due to difficult political and economic transitions. Let's get some quick reactions to that update from the IMF. With the continued sluggishness of the global economy and the marked slowdown in major developed markets, there had been an initial exodus of capital and hot money to emerging and frontier markets. But now the International Monetary Fund slashing growth outlooks for many of the emerging markets, and with positive economic data coming out of the US and Japan as well, there's been concern, growing concern of that this money will then reverse its flow and move away from emerging economies and back into the developed world. Martin Orji, fund manager at London-based Next Rubica Capital, however, disagrees.
Yeah, Africa is still extremely attractive. I think within emerging markets, Africa over the last 18 to 24 months outperformed all other emerging markets. And the good thing is it's not made this outperformance from a low base. I think typically it's very easy to say, anyone has outperformed if you're starting from zero, 0 to 1, as 100%, but, it's been consistent over the past 5 years. And over the past 5 years, we've had various shocks to the global economy. And for Africa to still, to outperform Brazil, and outperform India, and outperform China is a statement.
Let's take David a little deeper into that report. Moving on to London Live, where CCTV's Miriam Bemard is standing by. Miriam, even with the lower overall growth forecast from the fund, BRIC economies are still essentially going to be growing much, much faster than their developed counterparts. So essentially, is this an impetus, if you will, for stronger trade ties to develop between BRIC economies and sub-Saharan Africa?
Absolutely, Rama. You know, we're already seeing that happen. The BRIC nations have pulled together combinations of economic development and investments to propel rapid growth. Let's not forget their growth rate influences many frontier markets. Emerging economies in Africa could not only help offset any growth shortfall that might occur as the BRICS mature themselves, but by supplying resources and markets as well. Now, at the same time, these ties are helping both sides insulate from slowing demand in Europe. In fact, the Chinese government is planning to coordinate a buying mission in South Africa for their retail trading houses and state-owned enterprises in September, and looking at spending about $500 million in provinces across the country.
With respect to the IMF, however, it's deployed quite a bit of its firepower on the European bailouts that we've seen over the last couple of years. So how much of its resources right now can it really devote to the Aid for Trade program, which especially affects sub-Saharan economies?
Well, that's the problem. You know, right now 41 countries have active financial arrangements with the IMF, whether you want to call it a bailout or some sort of financial assistance. But the fund's biggest contributors themselves, the US, Germany, Japan, France, and the UK, are all in trouble themselves as well. You know, the US has a debt to GDP ratio of 100%. Japan has a debt to GDP ratio of over 200%. You know, despite this, the IMF has recommitted to helping the world's poorest communities get more from global trading networks as part of their post-2015 development agenda. You know, help the LDCs channel their exports and growth to reach for more than that 1.1% share of the world trade that we're seeing right now.
Indeed. We'll have to leave it there for the time being, though. Thank you very much for that update. A perspective from London there, from CCTV's Miriam Bemard. We're taking a short break here on BizAfrica. Here's what's coming up next. Funds under management up 10% in South Africa's private equity industry. But is the industry meeting the needs of small businesses? We'll be asking that question when we come back.
Talking tough on trade, conflicts over currency, and connecting economies around the world. From Tokyo to Shanghai and Mumbai, BizAsia links you live to the markets and brings you all the latest in business from China's unique perspective. BizAsia, a smart investment for your time.
Welcome back. South Africa's dominant power producer, Eskom, has announced yet another setback to the operational date of the Medupi power plant, which will be in the second half of 2014. Now, Medupi will be the biggest coal-fired plant in the world once complete, but it has been repeatedly plagued by what Eskom describes as contractors' underperformance and labour disruptions, all of which have combined to drive up its overall cost. Eskom has been looking to boost its generation capacity by up to 25% to ease a biting power shortage in Africa's biggest economy. Now, the latest delay is expected to increase the cost of completion even further by an estimated 15%, but the company says it will impose a penalty on the contractors. According to the company's chief executive, Eskom must now seek ways of bridging a projected 700 megawatt shortfall in 2014. Let's get some more insights into what's happening in South Africa. CCTV's Angelo Coppola joins us now live from Johannesburg, South Africa. Angelo, delays, of course, to Medupi's completion will put a 700 or so megawatt-sized hole in its generation capacity from now over to 2014. How is that hole going to be plugged?
Well, very simply, it appears that there's somebody waiting in the wings. The Wind Energy Association claim that they can put 600 megawatts of that 700 needed into play by probably winter of 2014. So there's going to be a shortfall of 100 megawatts, but they're also claiming that they can put 3,000 wind turbines in place by 2030. So, Raman, you've got to actually ask yourself, why are we building this big coal-fired power station when wind power and solar power could probably take up some of the load? So it's a question that we're looking at the moment, but it appears that there is somebody in the wings who can step in. Raman?
Indeed. Looking at the power sector, however, there's also another contractor working on a similar coal-fired plant, Kusile in this instance, who's applied for business rescue, essentially a Chapter 11 protection, if you will, if you want to put it in American context. What will the effect of that, however, be on the completion of the Kusile project?
Well, Kusile is only due to come on stream by 2018, so there's a bit of time there. We've got to understand that this announcement was only made probably late last week on the company's website, and Eskom probably haven't digested its implications. What we do know is that it's a subcontract to Alstom, and it's to provide FDG technology, which is to keep those 6 boilers, the airflow in a clean state. So it's kind of to make it green and more friendly. We don't know what the impact is going to be and whether this Chapter 11 stroke business rescue deal is actually going to take place. We do know that Alstom probably did know it was coming. Eskom probably didn't have a clue it was going to hit them. And it's kind of like the perfect storm again, Rahman.
Indeed. We'll have to leave it there for the time being, though. Thank you very much for that update. That's CCTV's Angelo Coppola speaking to us live from South Africa, Johannesburg, to be specific. Still in Africa's largest economy, however, 5,600 striking workers have gone back to work after a one-day wildcat strike at Amplat in South Africa. Workers down the tools on Sunday in solidarity with 19 Association of Mine Workers and Construction Union shop stewards who were suspended last week for orchestrating an illegal protest that prevented other workers from returning to the surface from their underground shift. Now, production was halted at the Temelani and Huseleka 1 mines on Monday, sparking fears of illegal strikes spreading yet again right across the platinum producers' operations. AMCU President Joseph Madunjo, however, said he had brokered a deal for the workers to end the strike by asking the company to reinstate the suspended shop stewards. South Africa's platinum belt has been rocked by a violent series of turf wars between AMCU and the National Union of Mine Workers, the NUM. Deputy President Halima Motlanthe has been tasked by President Jacob Zuma to help restore stability to the mining sector, but AMCU so far has refused to sign an agreement that binds all stakeholders, saying it needs a mandate from its members in order to sign such a deal. The South African Venture Capital and Private Equity Association says its members added 10% to their total funds under management last year, closing at about $126 million. Fund managers are finding investment opportunities in a range of business sectors in South Africa. But, as CCTV's Angelo Coppola now reports, it's not all good news.
The South African Venture Capital and Private Equity Association says the asset classes added 10% to their total funds under management last year, closing at $126 million. Fund managers are finding investment opportunities in a range of business sectors in the country, but it's not all good news.
A lot of the private equity funds are large in nature and don't benefit or don't invest in small companies.
Small businesses that don't have security in the form of a fixed asset are in a difficult position. Banks generally aren't interested in taking the risk and don't have the manpower to assist them in their growth. A small business that has benefited from private equity is Click Broadband.
Only way that you can get finance then is to use people who actually are willing to take the risk with you, grow with you, give advice to you, and also help you build the company. So in one side you get the cash flow that you need, because cash flow is everything in the company, but on the other side you got also professional help.
This asset class is slightly more personal. Money managers have a vested interest in making it work.
Equity is a long-term asset class. You commit to that company for anything from 3 to 7 years. So it's like a marriage, and you committed deeply in the sense of not just providing equity, so the funding, you commit also in the sense of providing expertise, because you as a fund manager have skin in the game.
While the sector is characterized by long-term commitment, it's essential that both parties understand when it's time to call it quits or exit the business relationship.
After 3 years, the formula is already fixed on the PE that we can buy them back. We have the choice after 3 years, whenever we want to buy them back on that specific PE that the company is worth at that stage.
The private equity and venture capital business in South Africa is booming, unless of course you're a startup, because portfolio managers in that sector are looking for a track record and an operational business. I'm Angelo Coppola for CCTV in Johannesburg.
Let's make a quick run through the markets in Africa now, and a flood of positivity, if you will, running through the markets, starting of course in Nigeria. The All-Share Index closing higher by 0.6 of a percentage point. The All-Share Index in South Africa also higher, despite of course the news that's coming through with regard to Medupi, and of course the energy pricing implications that of course does imply for South African consumers. The 20-share index in Kenya, for example, up by 0.5 percentage point, and the Egyptian market, of course, after the news of an interim prime minister coming on board, up by 3.26%. Certainly something to watch right there in future.